For more on what to expect in the year ahead, let's bring in Jonathan Boyar. He is president of Boyar Research, the firm recently putting out its annual Forgotten 40 report, highlighting stocks it believes will outperform the leading indices in 2022. Jonathan, thank you for joining us. I actually wanted to pick up with one that you picked in 2021 and had put on your list, which was Disney, because it didn't work out as well as some of the others on your list and was one of the worst performers in the Dow. And I'm just wondering if you think that carries over and it's still one of your picks for this year.
It happens to be one of our picks. First, thank you for having me. I really appreciate it. It happens to be one of our picks. It was a disappointing year, but as a long-term Disney shareholder, I certainly can't complain about the performance of Disney shares throughout the years. But yes, it certainly was a disappointing year, but I think there are better days ahead for the Mouse House.
Yeah, you had some good picks, including Bank of America, which surged last year. Any other financials on your list? Do value investors still like the banks?
Yeah, we had Bank of America, which was one of our best performing ones last year. It's on the list again this year, as is Chubb. And just to give you a quick background, the Forgotten 40 is not our cheapest stock. It's our 40 best ideas for the year ahead. There's a catalyst for capital appreciation. And I think in a year like 2022 that follows a year like 2021 where the major indices did so well that these individual catalyst-driven names should do great.
Let's go through some of the individual picks. One of them I'm interested on there is Uber. Talk us through that one.
Yeah, Uber's, I think, a misunderstood story, and it's certainly not a traditional value name by any stretch of the imagination, but it has a really valuable network. It's also, when you just look at their core rides business, it's unbelievably profitable, and they've grown this delivery business really from nowhere very, very quickly. They have about $10 billion of equity stakes in various ride sharing businesses throughout the world. It's a really well-run company, and it's worth noting that the CEO just bought about $10 million worth of stock a few weeks ago.
How does its valuation stack up against the competitors like Lyft or Doordash? I feel like they've been more rewarded.
Yeah, no, I mean, compared to Doordash, which is trading around roughly 12 times sales, Uber's is a much more modest valuation. And the Uber rides business is a much better business, and they're not really getting credit for it. It's almost as if better business you have, the worse valuation you'll get. But Uber is a great, I think, long-term compounding story, and it's well run.
What about Discovery Media, which I also see as one of your picks? Why is this the year for that company?
Yeah, no, you have to look at a catalyst, and I think this year, with hopefully the Warner deal closes mid-year, I think it's going to be a fantastic combination. David Zaslav has done a great job at Discovery. I think that if you look at the Scripps acquisition they did a few years ago, the cost savings that ended up happening were about 3 times more than the estimates. So I think there's a lot of fat to be cut. I think they have fantastic content. I think they're going to be Disney and Netflix are going to be duking it out in the streaming wars.
Why do you think the market is so skeptical about it? And what is the market underestimating about this deal?
I think the market just one media, except for a select few stocks, are pretty out of favor. They don't understand the streaming business. They see the leverage that's going to happen with the deal, but they delevered pretty quickly after Scripps. And we get to around $40. Right now, you're able to buy, on a pro forma basis, a Warner Discovery for about 7.5 times 2023 earnings. I think it's I think it's a really compelling value here. It's worth around $40, as I said, as a great operator. And I think it's also worth noting that John Malone was willing to give up his voting shares in order to consummate the deal. And I think that's a real vote of confidence for shareholders.